Hey, what's going on, folks? I got a just a question I've been thinking about. I was listening to the Macro Voices podcast last night, and there was a really good question being asked, and that was, what nations are essentially going to be doing really well moving into the years forward for a couple of reasons. One, you see a lot of the developed nations now moving into something like a yield curve control. I think we saw today the Japanese yen jumped all the way up to 150 yen for $1, and it immediately just slammed back down to like 146, pretty much because over 145, the Japanese economy can't afford to run because they're buying all of their imports in US dollars, and it's just taking too many Japanese yen to get all their imports. And so the government is essentially supporting the economy by trying to, they're selling US dollars to depress the value of the US dollar, and they're buying yen to help support the yen, so that way their businesses and their nations can afford to pretty much run their own economies. And so I think we kind of have a view here in the United States that pretty much all the other markets, and especially the emerging markets, are pretty much prone to failure and collapse. Like if we're having a hard time, they're definitely having a hard time. But there is kind of something looming here where, China has been in lockdown because of COVID. And so they're not buying as much energy on the world market as they normally would. And that's part of the reason why you're seeing prices so low right now. But the question is, when they come back and start buying energy again, what is that going to do to energy prices? And obviously we know that the West and especially like the EU and the United States, they've underinvested in their oil and their natural gas for decades now, and so there's just not enough supply to support the pre-pandemic economy. And so, uh, when they come back online, there's going to be a high demand for oil. The price of oil is going to jump pretty high. There's also going to be a shift, or there already is this shift toward renewables, and renewables, they can't sustain the economy as it is. There's no way to store that energy. It can't handle the base load. And so the question is, which nations are going to blink first, set aside their renewable energy goals, and which ones kind of have a little bit more energy security. And those are the nations that are probably going to be more successful moving into the future. If your energy in your country is too expensive, well, you can't afford to run your industries. And so, so essentially you have these emerging markets who really aren't willing to follow along with the craziness that the West has been engaging in regards to climate change and renewables. And so those nations, they're willing to buy really cheap energy from Russia, which is a no-no in the West, and they're willing to burn coal, which again is a no-no in the West. Now the thing is that for these nations, then they have access to cheap energy. Cheap energy is how you grow your economy. Honestly, you can look at a chart of GDP, and it just correlates to the amount of energy that your nation burns. So the more energy that your nation burns, the richer your nation is going to be, which means that that's probably where the highest returns are going to be in the future. So anyway, one of the things that they drew my attention to in the podcast last night is the difference between how some of these emerging markets like Indonesia and Brazil, their markets, bond markets or stock markets are either flat or growing, or at least, moving to the upside, while the West, the bond market's collapsing and the stock markets are collapsing. Obviously, they've stabilized in the past week or two, but we'll see what happens moving into 2023. And so I just want to look here. This is the SPY, so this is the S&P 500. and the S&P 500 is down. It's down over 20%. But if we look at iShares, I believe it's EWZ. Yep, the Brazil ETF that tracks companies in Brazil. They are year to date, they're up 27%. They've obviously had a big climb and then back down and then back up. So it's obviously more volatile, but they're up. And so I kind of began to wonder why they are up. And we can just start with a couple of things. So first of all, let's just look at where they're planning on getting their energy from. Non-renewable energy this year, in 5 years, and then in 10 years. You got the oil and gas products. They are planning, as a percentage of their total energy, shrinking that. Natural gas is staying the same. Coal is staying the same. Uranium is growing. And then their hydraulic energy, roughly about the same. Firewood slightly down. Sugarcane derivatives, which is not really something we would use in the United States, down. And then obviously other renewable resources, they are planning on growing those, but they're not willing to sacrifice. This is what it seems. They're not willing to sacrifice their countries on the altar of clean energy, and just going along with whatever the West says about Russia. And so, whether or not you believe there's a moral issue there is certainly a financial issue that these countries have to consider, especially since if energy gets too expensive, your people starve to death. People are going to die anyway. It's not like it's an easy moral decision to make. You have the lives of people are in either hand, no matter what you choose. So it's definitely something that these countries are wrestling with. Brazil, it seems, is one of those nations that is going to most likely, side with their own constituents and the businesses. So bond yield spread. So if you know what our yield curve looks like in the United States, it looks a little bit like this, just not quite so steep in the front. And this is not a good sign. You would actually want to see your yield curve if your nation was healthy, the total opposite of this, low up front and then getting higher toward the back. Like you expect like a mortgage rate, you expect the interest rate on a 30-year mortgage to be higher than a 15-year mortgage. But Brazil's short-term rates here are all the way up like 14.5%. And that is because they have raised their, essentially the way you squash inflation is you raise your interest rates so high that it sucks money out of the economy, and that'll bring your inflation rate down. Kind of like what the U.S. is trying to do. But the U.S. has been fairly unsuccessful because the United States has too high of a debt burden. And so if interest rates go too high, then all of their, if the interest rates go too high, you could see the bond market totally collapse. And you could see the government have to, essentially go to the Federal Reserve to help them pay all their loans. And that's just not something the government can do. But what you can see is that with Brazil, they've been fairly successful. They've raised their interest rates in order to bring down inflation. You can see here, inflation was up. They're bringing it back down. That's pretty much what every nation in the world looks like. The thing here is that the West and the United States have been fairly unsuccessful so far in bringing down inflation. Brazil has been able to, because they don't have as much debt, they've been able to raise the interest rate and bring down inflation faster, which is going to be healthier for their economy. All right, so this is the amount of manufacturing production. Obviously, during 2021, when everybody was buying everything, there's tons of manufacturing going on throughout the world because there's so much demand. It fell off, but now you can see they are coming back stronger with more manufacturing at a more kind of stable growth. Small business sentiment, you can see that's been ticking up as well. I would not say that you would say the same thing in the United States. And the exchange rate, it's been fairly flat between the real and the US dollar. And so here's the question. Are you going to keep your money in US stocks, or are you going to look to the future and say, okay, what are the nations that are actually going to be able to actually have industry and growth in the future? Well, if you ask me, Brazil is going to be one of those countries. I don't know for sure, but it's definitely something I'm looking into. If you guys have any thoughts or questions, feel free to put them in the comments below.